Top three things in my notebook this morning. Number one, the Russell 2000. Number two, the 10-year bond yield. And number three, the price of oil. Russell 2000 now down 10.2% from the July 7th closing highs, which of course was the all-time bubble closing high for small to mid-cap stocks. And again, you can't get out of them. That's the problem. It's called the liquidity trap. So again, we'd reiterate our call here. No, we don't like them on bounces. On bounces, the only thing we'd like you to do is to sell them. Point number two would be the 10-year bond yield. Now again, follow the data. Rate of change of the data, the economic data. Yesterday, the ISM number missed by like a little bit. It slowed from 59 in August to 56.6 in the prior month, and the 10-year bond yield got smoked. And those of you that are along the long bond were celebrating. What a day for bonds versus the small cap equity bubble. What a day for bonds, period, within what's been a very, very good year. So 10-year bond yield, all I have to ask you is this. When the next job report misses and or GDP misses, what do you think the 10-year bond yield is going to do on that? Again, it can go a lot lower. 1.7% is the long-term tail line of support for the 10-year bond yield, and it's currently trading right around 2.4%. Now, finally, oil. I love this. I mean, on the way up in the first quarter, everyone loves stocks, and oil was actually still good for stocks. Now, on the way down in oil, that's the reason to own stocks. And again, don't forget that when you're in the fourth quadrant, when things are deflating, that's the point. Deflation has to occur before you get that big consumption tax cut. Now again, inflation is sticky. I don't think, unless you want to give me a buzz, that your rent went down yesterday or your price of coffee at Starbucks went down. Price of oil will have an impact at the pump on a lag. But again, if you've been buying into that, you've been getting train wrecked. Again, the consumer discretionary stocks are one of the worst performing sectors, not only in the last week and a half, but in the last 4 weeks. So again, understand that timing matters. I will have no problem buying consumer stocks lower on a tax cut. But again, while you're in the deflation, the other thing that deflates are stock prices. Stock prices. Those are your top three things.